Welcome back to Frontline News. I'm Javon Keys. It's now time for Frontline Business. A recent survey conducted by the Jamaica Chamber of Commerce, JCC, has revealed that consumer confidence continues to wane due to the impact of the COVID-19 pandemic. Sandy Williams tells us more.
Consumer spending is one of the factors that fuel economic growth. However, with the country now 8 months into the pandemic, a report has revealed that Jamaicans are growing more concerned about when businesses and their source of income will be stabilized. On Tuesday, Managing Director of the Market Research Services, Don Anderson, said findings of the Jamaica Chamber of Commerce Business and Consumer Indices JCC survey for the third quarter revealed that 65% of consumers anticipate that the state of the economy will worsen over the next 12 months.
Despite a slight uptick in consumers' views of current economic conditions in the third quarter, which means that the consumer confidence picked up a little bit over the last quarter, overall, it does represent a really dramatic fall off in the level of confidence that consumers repose in the economy. What about expectations in terms of the economy? They are not really optimistic at this point in time. Consumers' expectations about the economy has declined from 175.2 points in quarter two to 127.8 points, the lowest since 2017.
On the other hand, some consumers are expecting businesses to bounce back soon.
They talk in terms of government efforts and plans, so they're lauding whatever government is doing right now to ensure that things change for the better. Thirdly, they believe that people will learn how to live with the virus by then. We're not quite sure how long, except that some people think that this will be with us for another 1 to 3 years. And fourthly, that the economy will reopen and things will bounce back.
Mr. Anderson shared that confidence among some business owners also declined.
One of the key questions that we always use to measure how businesses really feel about the situation is the propensity and the likelihood that they would invest and expand their businesses by either capital injection or what. Well, over the last 2 quarters, we have seen virtually a reversal in how businesses feel about the investment climate. 55% now believe it's a bad time to invest. 6% said they didn't know, but 39% down significantly from what we used to measure, say, in 2019 and before. 39% said it's a good time.
And in spite of the level of uncertainty within the business sector, Mr. Anderson says many businesses believe they would survive. Sandy Williams, Frontline News.
Digicel's boss Dennis O'Brien is said to be among 7 of Ireland's 16 billionaires who lost a combined 3.2 billion euros last year, which has resulted in a 16.8% collective fall in wealth. According to media company Irish Central, Mr. O'Brien's fortune currently stands at 1.1 billion euros. The media company is also reporting that other Irish billionaires such as Patrick and John Collison, who founded the financial services company Stripe, have been able to acquire significant profit despite the negative impact of the pandemic. Now, it's understood that the Collisons saw their personal wealth increase by 2.75 billion euros since last year. And the World Bank has indicated that it will have to make a fresh start after the COVID-19 pandemic reversed progress made in reducing extreme poverty globally. According to World Bank President David Malpass, although some countries have begun to recover, other underdeveloped and developing nations may have to wait several years before finding their way back to pre-COVID-19 conditions.
The World Bank's new poverty projections suggest that by 2021, an additional 110 to 150 million people will have fallen into extreme poverty, living on less than $1.90 a day. COVID-19 and its associated economic crisis, compounded by the effects of armed conflict and climate changes, are reversing hard-won gains in poverty reduction, ending more than 2 decades of continuous progress. Poverty is expected to rise in 2020 for the first time since 1998.
Now on to stocks. In Tuesday's trading session, the JSE Combined Index advanced by 333 points to close at under 3,000 units. Overall market activity resulted from trading in 112 stocks, of which 40 advanced, 32 declined, and 40 traded firm. The junior market index declined by 10.79 points to close at under 2,000 units. Stocks advanced for 1834 Investments, Barita Investments, Berger Paints, Cargo Handlers, and Caribbean Cream. Stocks declined for 138 Student Living, AMG Packaging and Paper Company, Blue Power Group, Caribbean Assurance Brokers, and Caribbean Cement Company. Trading firm were CAC 2000, Siboney Group, Dolphin Cove, Epley Limited, and Equity Line Mortgage Investment. Tropical Battery was the volume leader with 3.9 million units, followed by Pulse Investments with 1.1 million units, and Wigton Wind Farm Ordinary Shares with 7.8 million units. And now the foreign exchange. Now on to commodities. Oil prices went up on Tuesday on hopes that the United States was nearing a stimulus deal. Brent crude futures gained 20 cents to settle at $42.82 a barrel, while U.S. West Texas Intermediate crude futures rose 39 cents to settle at $41.22 a barrel. And that's it for Frontline Business. I'm Javon Keys. Pleasant viewing.